Hello and welcome to another episode of our From the Helm series live here at Gather Round Resources Rising Stars Conference in partnership with Bell Financial Group. I'm Grady Wolf, market analyst with Bell Direct, and a familiar face here, Alex Scanlon from Barton Gold. I'm excited to hear all about the Tarcoola project and everything else you have going on. Alex, tell us about the latest in the last 12 months.
It's been a pretty busy time for us.
Yeah.
So we basically acquired all of our assets about 5 years ago with a plan to sort of crystallize 2 development platforms.
Yeah.
And then essentially move those ahead of a market that maybe wasn't so interested in gold.
Look
and
now.
Be able to capitalize on that.
Yeah.
So the last 12 months, we've essentially crystallized what we call our stage 2 expansion project. That's that large scale Tonkilia project.
Yeah.
That'll be a 130,000 ounce per annum producer, bottom quartile globally. And then now we've been shifting our attention towards what we call our stage 1 platform.
Yeah.
So really, we're actually at this really interesting point of time where we're actually bringing these 2 things out of theory down to the ground, crystallizing the plan, and the next 3 months is essentially putting those together into a 15-year development pathway.
Now, your assets are based in Adelaide at the moment.
South Australia, Central South Australia.
South Australia, Adelaide, South Australia. Tell us about why mining in South Australia is so attractive for the gold prospects that you have.
Look, I think one of the interesting things about any jurisdiction is if it's been overlooked or kind of forgotten about, right?
Yeah.
So my investment career has been focused on long-term macroeconomic analysis and figuring out where to position, and then what assets meet that sort of strategy, and more is the better if they've been overlooked and forgotten about. And South Australia is a place that has had high-grade gold production in relatively small quantities for 130 years, right in the Gawler Craton. So BHP owns the IOCG province. They own Carrapateena, Olympic Dam, Prominent Hill. That same basin goes from being sort of deep and coppery on the east side of the highway to shallow and goldy on the west side of the highway.
Yeah.
And there were a couple of significant discoveries in the 90s when the gold price crashed. Everybody left gold altogether. And when gold became popular in the 2000s, people went back to Queensland. They went back to Western Australia. They forgot to come here.
Yeah.
So we basically set about between 2017 and 2020, just quietly consolidating the rights to everything, and then grabbed it all.
Well, that's exactly what you want to see in this kind of environment. And gold is running so hot right now. It's hit 3,043 overnight per ounce US dollars. How does that drive tailwinds for Barton?
Look, certainly there is more interest now in gold, right? And we've seen a couple of moments over the past 12 and 18 months where you remember when the gold price went to 2,000 and they got a little bit excited. Yeah. And then they got to 2,600 and everybody got a little bit excited because it broke through the hedging levels really for the first time at those 2 points. Yeah. Now gold has made 3,000 rather convincingly.
I don't think anyone's hedged at that either.
Well, you know, we've moved way past many of the structural hedging levels, right? And so we're seeing now the price consolidate around 3,000. And that's happening around much bigger macroeconomic adjustments. So what's interesting is I think a lot of the people who have always been passionate about gold, they've always been certain about it, but they've been kind of, every time they dip a toe, they get their toe cut off. Right? Yeah. So even the most passionate investors are kind of hobbling around missing a lot of toes. Yeah. Now what's happened is with the gold price where it is, they're basically saying, look, it is impossible not to make a wall of money here. Yeah. So now we are going to move in position really hard. And we've seen a lot of our European investors sort of doubling and tripling down, North American investors as well. In our case, they're obviously investing both in our team, but also our infrastructure capability. But I think writ large, we're seeing a return of baseline interest for the gold market. Yeah. And again, nobody's interested in the gold market. No one's invested in the gold market. So I think it's the front end of a very interesting period of time.
So you think there's structural tailwinds to come?
Absolutely.
Yeah. So now talking about gold, the stepsister of gold is silver, and you've had some intersects in silver recently, the Tarcoola project. Tell us about that intersect and how silver's been running hot as well. So it kind of bodes well.
So, you know, silver has always been a presence in the 3 projects that we have. Yeah. Sometimes more, sometimes less. And our large scale project has about 2.5 ounces of silver for every 1 ounce of gold. So we aren't surprised to find silver in that project. In the Tarcoola gold field, this has historically been known as a gold field, a high grade gold field. So what was surprising was not necessarily the finding that we have silver with some of the gold, but when we drilled sort of a subsidiary structure, trying to map out what is this gold silver footprint, we came up with almost a purely silver dominant, super high grade silver hit. So the intersection was 6 meters at 4,747 grams per ton, or 28,000 gram meter. that was very surprising. One, that it was pure silver in a lead halo, so it was not associated with gold. And two, the grades are kind of like the style of super high grade epithermal grades that you'll find in Africa and South America and stuff. So that's got a lot of attention. That's the highest grade silver intersection on the ASX for the first 3 months of the year. And I think the fourth highest in the world globally for the first 3 months of the year. So that's quite surprising. We don't know what it is yet. We know it's exciting. And we are now rapidly mobilizing a follow-up program because we may have a silver high-grade system and a high-grade gold system sitting right next to each other, and happy to blend those together and put them through our mill.
Absolutely. Now, talking about the Tunkilia project, you had the JORC Resources recently announced to have grown to 1.6 million ounces of gold and 3.1 in silver. That's a pretty big resource. How does this compare to the global scale of those kind of resources?
Look, I mean, it's kind of middle of the pack, really. I mean, what we were interested in with Tunkilia was the geometry, the geology, right? So you get a lot of 10 and 20 million ounce projects up in BC or Quebec in Canada, but you've got something that, in theory, like if you move that project into Australia, you'd have a $20 billion project. But there in Canada, you need to build a $2 billion highway over 5 mountains to get to it.
And how do you get there?
And so, and they're, narrow, high grade, underground, very, costly. We like Tunkilia because the geometry is really simple. It's very broad, very bulk open pit. It has a higher grade central zone, which will pay back the entire development cost in less than a year. And so it's really more about how efficiently can we get those ounces out of the ground and how profitably. And we've modeled it very conservatively as a first quartile producer.
And now talking about the Tarcoola project, when can investors expect an update on production and timeline to production?
So Tarcoola is definitely part of our sort of stage 1 area. So we have an existing fully permitted mill. We have some open pits there. We have an historical underground mine, and we have the open pit at Tarcoola. So our stage 1 strategy is very much saying fully permitted mine, fully permitted mill. The market's risen to meet our long-term strategy for gold, so we'll turn these back on. And we've just sort of guided the market about a month ago that we're looking at starting that in the middle of 2026. So in parallel with our advanced studies on Tunkilia, we're now coming up with the plan for stage 1. So in the next 3 to 4 months, people will be able to sort of see both of these plans very clearly, including, with Tarcoola and the mill, how are we going to restart the mill? What's it going to cost? What material is going to go through first? And to the extent that we can forecast, what do we think the production profile looks like as we go from 0 to 20 to 40 to 50 to 150,000 ounces?
And over the next 12 months, what can investors expect on a news flow front out of Barton?
A lot. I've actually been sitting down trying to sort of map out what I think kind of the sequence of events looks like so we can really plan going forward. I think really critically the next 3 to 4 months are essentially crystallizing a really clear, simple understanding of stage 1 and stage 2. Bringing those down around the middle of the year and just setting those down and saying, here we are now, middle of this year, here's our plan for stage 1, here's our plan for stage 2, here is how you have a 15-year growth and development pathway. It starts with a very small amount of money to start our mill. We go to 20, 40, 50, 60,000 ounces. We then self-fund the development of the second mill. So we'll give people that clarified understanding with a clear view to production and operations in 2026, development of the second project 4 years later. And then really it's going to be basically filling in just a lot of the technical work and announcements to basically upgrade the resources, keep growing the silver, adding additional mineralization, increasing the feed grade that'll go through stage 1 and pushing the productive ounces up. So it's really a shift into a production mentality in a pre-production setting. And then it's just a question of stepping across that threshold in 2026.
Alex Scanlon of Barton Gold, thank you so much for joining us today from the Helm. I hope you enjoyed that episode as much as we did filming it. If you did, be sure to subscribe to the Bell Direct YouTube channel.